Welcome to the D-Shift podcast, where we provide inspiration, motivation, and education to help you transition from the challenges of divorce to discover the freedom and ability to live life on your own terms. Are you ready? Let's get this shift started. Hello and welcome to the D-Shift podcast. And I am so excited to have a very specialized divorce professional on the show today. I want to introduce you to Stacey Ellison. She is a certified divorce lending professional, and she's also a divorce mortgage planner. And so her focus is really on guiding couples in divorce or individuals who have property that they need to get rid of during the divorce process to really understand what are the best options, what's available in the mortgage industry, and how are you going to be able to create a holistic approach. And Stacey has a really unique position in that she can work with your attorney, with your financial planners, and with other people if you're in a more collaborative situation, and Stacey, we're going to get into more of this, but you can also work with just one party if it's more of an adversarial situation as well. So, Stacey, welcome.
Well, thank you, Marty. It's a pleasure to be here. I've been looking forward to our chat.
Me too. And I think this is such an important thing because there's only sort of two things in divorce that I think are really huge, and that's the kids and the money. And that's typically all that divorce boils down to.
It's all about kids and money. That really is that. But yes, 100%.
Yeah, and the house kind of comes right in the middle of that because yes, the house is typically the couple's biggest asset, but there's also an emotional thing. This is a family. This is where the kids are growing up. There's an emotional component to the house. It maybe isn't the same with the 401k or whatever. So
yes.
Yeah. Before we get into all of that, Stacey, what got you into this very specialized professional area when it comes to the divorce?
So I've been in the mortgage business my entire career, basically. I was a processor, I was a loan officer, I was an account executive. I've trained in all areas of mortgages, going back to like 1990 something, like a long time. And about 5-6 years ago, I happened to have several divorcing clients come to me after the divorce was finalized, and it was like within a 6-month period, I had three or four clients come to me saying, I need to buy out my ex-spouse. Here's my settlement agreement. I have 60 days or 90 days or something like that. And each one of them presented with a different obstacle. Okay. Because, and it was challenging and it was puzzling, because for one reason or another, there were either the alimony wasn't usable income or they hadn't been on their job long enough to use a second job. But because when a divorce is present in mortgage financing, the guidelines change. And I learned this very quickly and very painfully. And it got me intrigued because I love puzzles. So I was like, I need to understand this. And I learned with each one, but of course, I had 3 or 4 in a row that had different reasons. So it got me thinking and investigating. And in my research, I came across the Divorce Lending Association. And I was like, oh my gosh, this is a thing. This can help so many people. And I got my certification through the Divorce Lending Association. I became a certified divorce lending professional. That was January of 2020. So COVID hit.
Yeah.
And I couldn't really do anything with it, and mortgage rates dropped and everyone was refinancing and everything was virtual and all that. So then once the COVID, we came out of that, and I was like, I need to do something with this. I need to network with attorneys and financial planners. I need to talk to or access divorcing homeowners, because everyone I talked to was like, where were you when I got divorced? I could have used you.
I hear that all the time.
Right? I'm like, well, I'm right here. So that's how I got into it, because it's a very specific portion of the divorce process where family law, tax law, and real estate all overlap and interact with mortgage guidelines.
Right.
So by getting involved early in the process and working with the divorce team, I can help structure the settlement in such a way where it cooperates with underwriting guidelines and doesn't conflict with it.
Right.
Because it's a horrible, difficult process that everybody goes through. And at the end of it, where you think there's a light at the end of the tunnel, and like to find out that that's a train and it's not the light, and after you fight so hard and you want to keep your house and then have to sell it, like that's just horrible. And I don't
Right.
want anybody to have to go through that. So I want to set the settlement agreement up for success post divorce and make sure that everybody gets the happy ending, and the new start that they
Yeah.
want and deserve.
Yeah. And Stacey, I so appreciate this because honestly, attorneys are not up on what mortgage companies are looking for to qualify for a mortgage. And I think
And
a
they're
lot,
not supposed to be.
no,
They're
they're
not
not.
supposed
They're
to be. You
supposed
can't
to do the
expect your
law.
attorney to
Yeah.
understand mortgage guidelines.
Right.
That's my job.
Yeah. And what I was going to say, and this is not a knock against great attorneys who bring in people who have expertise. Unfortunately, a lot of attorneys just don't. And so again, maybe it's because they don't know that these professionals exist, or maybe because the client never brought it up. I totally get that. Unfortunately, I have seen situations where the divorce decree has said, the spouse that retains the home, and it's quite often the woman, if there are children
Mhm.
involved, will either get qualified for a mortgage within 90 days, or the house will go on the market and the spouses will have to agree on a selling price. And so what I see is, first of all, qualifying for a mortgage in 3 months is not likely, even under really super good circumstances, for a lot of people, and especially if you haven't been collecting any kind of spousal support for the last 6 months to qualify as income or whatever it may be.
Yes.
And
Yeah.
it's like the law system cannot operate in a vacuum. And so they create these crazy agreements without understanding that it's not doable.
Right.
So let's talk, if you don't mind, let's talk about some of the common myths or misunderstandings you
Yes.
hear clients come to you with about mortgages.
Okay. Well, the biggest one is like, oh, I'm just going to have my husband removed from the mortgage. Doesn't work that way. You can either do a refinance, and there's two different types of refinances depending on the situation. So it's important to understand which one is going to be more beneficial to you and accomplish your goals. There is the possibility of a loan being assumable, but not all loans are assumable. And even ones that say they're not might be, but there's no guarantee. Um, so you really, and regardless of whether you're refinancing or assuming a loan, you have to qualify for that. So you have to meet either industry standards for a refinance or your specific lender's requirements for an assumption. And they can make up whatever guidelines they want there because they already have your loan. So it's not just as simple as one spouse keeps the house. There's got to be a lot of numbers run. You got to make sure that it's financially feasible now as well as sustainable long term, because as you said, the house can represent a lot of emotion.
Mm-hmm.
And just because you want to keep the house doesn't mean you're going to be able to qualify for a mortgage or an assumption, or that it's the best financial decision for you long
Yeah.
term. So I help figure all that out.
Yeah.
And numbers don't lie, and numbers are not emotional. So if I can help bring clarity and understanding and help someone come to terms with what is possible, because what might be an option legally isn't always an option when it comes to mortgage financing,
Yes.
and work with the divorce team and the divorcing couple to figure it all out, um, and make the process a little bit easier than I will have achieved my goal.
Right. Yes. And I really hope that people are listening, whether it's men or women listening to the podcast, because unfortunately there are so many situations where people just assume things like that a mortgage can just be transferred between people going through a divorce.
Yeah.
Or that, because here's one I've been hearing a lot lately. Well, the payment has always come out of a joint account. Therefore, as long as the payment continues out of the joint account, it doesn't really matter. And I'm thinking, now, wait a second, how is that good? And I've actually seen it where a divorced couple has continued to maintain that joint account and the payment goes out of there, but and there was never a title transfer, there was never a mortgage transfer. So
So then both
the
so
legal
both
owner of the
spouses are,
house. Yeah.
but you know what? I mean, so a lot of, I mean, and the and this ties into the other big thing is that many people have low mortgage rates, and mortgage rates are not as low as they used to be. So I do see a lot of people postponing any change in the
Mm-hmm.
mortgage. Um, and not removing a spouse from the mortgage, not changing title, in which case the mortgage keeps on getting paid as usual, then that's fine. It's when you're looking to change title, or take one spouse off or remove someone from the liability, where you have to do something and look into it.
Right.
So keeping the payment as is, then the vacating spouse is still helping to pay the mortgage. If that's a decision that the couple makes, that's a decision the couple makes,
Right.
right? That no lender is going to come back and,
Right. Sure.
you know,
Sure.
do anything about that because the payments are getting made.
Right. But there is a complication there in that if everything looks good and everything's going well, it's going well, but then all of a sudden a partner stops putting money into that joint account, or a partner decides they want to sell the home, and you're both
Yes,
still on the title and you're both still on the mortgage. That's a trip back to court again, and that who
absolutely.
knows how many
Absolutely.
who knows the cost of those
Yes.
legal fees to wrangle that one out. So I think,
Yes,
yeah,
exactly.
you're right. If it's collaborative, if it's good, just be aware that it's not just because you're agreeing today doesn't mean you're going to be agreeing 2 months from now or 3 months from now or 4 months from now. So
And
um
and if one spouse is vacating the property, like staying on title and staying on the mortgage can have long-term risks associated with it if they're going to look to buy another property, or because if they're still on title and something happens to the property, they're still legally tied to that property. So that, there are a whole lot of other issues that need to be taken into consideration if that's what they're going to do. And
right.
I bring it all the questions up front. I don't have all the answers. I am not an accountant. I am not an attorney. But I know what questions to bring up so that clients can have that conversation with their accountant and with their attorney, and make sure that all the bases get covered and everybody
Right.
is protected the way they need to be.
Yeah, and that's what I was going to say. I think it's good for it, whatever couples can do, whatever works for them should be what they should be able to do. And at the same time, it is important to have the full picture. You can't go into something really Pollyanna, oh, everything's going to be great all the time. Because I think we have to be realistic. And I know that one of the areas that when there's two people on the title and one person is no longer in residence, there's a huge issue about the insurance, who's actually paying the
Yes.
insurance. Because if the partner that is vacated is still the one paying the insurance and they're not living in that property,
There's no
something
insurance. They're not the
happens, you
insurance.
you may
Yeah,
not have any insurance. So yeah, there's
exactly.
all those things.
Exactly.
Yeah.
Yep. Lots of things, and um, a lot of things to think about. And that's what I do is I cover every aspect of the home, review it with the client. I do a report that I send to the divorce team, and that can help them negotiate and know exactly what someone might or will or will not qualify for
Right.
after the fact, because you don't want to just assume you're going to qualify and that it's going to be an easy process, and making sure that, like, this is plan A, but if that doesn't happen, here's plan B.
Right.
right? And having a backup, like if I had this, someone wants to assume the loan, that's great. I can help with an assumption, but not till after the after the divorce is finalized. And what happens if it's not approved? Because there's
Right.
no guarantee. I can help guide people through the process and get their paperwork to their investor, their lender, and all that. But it could take 45 days, it could take 8 months. And if it's not approved at the end of it, then what?
Right.
And having the timeline and the plan as part of the settlement agreement to protect all parties,
Yeah.
right? And set expectations up front is
And
important.
I have seen the reports that Stacey generates for her clients, and they are amazing because they have, I think the one I saw had like 4 different options that people could take a look at, whether he pays it off, she pays it off, they sell,
Mhm.
or one person keeps. It was amazing, the detail. And it was so clear. Like, I'm not, as everybody knows, I am not a numbers person, but it was really clear and easy to look at the information and the way that it was represented, that you could, you could zero in on what you needed to know. um Stacey, what do you think is the biggest mistake that you see people make during divorce when it comes to the property? And does it also apply if a couple has multiple properties? Can you talk a little bit about that sort of scenario?
Um, well, I think the biggest mistake is not figuring out what you'll qualify for ahead of time,
Right.
right? And not having an idea of the process and the time frame that it's going to take, and what's plan B if it doesn't work. That's the biggest thing. Um, when it comes to multiple properties, it gets very complicated. I mean, because then you got to have an idea of capital gains and appreciation, and it gets it gets a lot more complicated, and you got to get your accountant and a real estate attorney involved and all of that. Um, but it's doable.
Yeah.
It's not fun. It could be, but it's important to do.
Well, and I've worked with couples who have had, say, they've had their home, maybe they've had a cabin somewhere, and then maybe they've had a rental home or an Airbnb that they bought into or something. And so, through the divorce, what the decision has been in, well, one person will stay in this home and one person will take, the rental property and make it
Mhm.
their primary residence, and they'll even do like a timeshare on the cabin. Like, I've seen that scenario.
Right. Yeah. Yeah. Whatever
But
works.
but
Whatever works.
there still is this concern about, well, yes, but we have all this equity built up in our residence. We just bought the Airbnb, and it's no longer going to be bringing in any income. And now somebody's going to have to pay all the stuff to live there. So it gets
Right.
really complicated really quickly.
It
And like
does.
you say,
It
see,
does. Yeah, and I can do, like, I've had clients with multiple properties, and I do one of those reports for each property to look at the different options, and then of course talking to the financial planner about making sure that it's an equitable distribution, and with regards to, like I said, capital gains and all of that
right.
stuff
Yeah.
that I know nothing about, but but financial planners and accountants do, so.
Well, and that's the beauty of having that team approach, because that way everybody stays in their lane and knows that they're working with the data from another professional. This came to the clearly into focus with me when I was dealing with a client a few years ago, where the spouses went out and had realtors give them an appraisal of what their properties were worth. And then they also had, of course, the realtors were market value, like to sell to them.
Yes.
Then they had their
Yes.
tax appraisals, and then
Yeah.
and then they had their appraisals. And I find that so many people, we all value what we have. We all think it's the best, the greatest, and I'm sure you hear that a lot, where people say, well, I know if I sold this house, I could get X. And you know darn well the market is like X minus 5,000 or whatever.
Yeah. Yeah.
So
Um,
is that where this all kind of comes into play together? Do you really see that as being a bit of
oh,
a reality check in some ways for people?
it is, and like you said, it can be a hard pill for people to swallow. And if you ask a realtor, an appraisal, a mortgage company, and yourself, you're gonna get four different values. That's really what it is. Um, and yeah, the thing to keep in mind is that yes, you guys, the couple through the process can come up with a number, however that's done. But if a mortgage is going to be involved, the lender is going to need their own appraisal. And that's the value that's going to be needed. So what happens if the lender's appraisal comes in different from the CMA and the appraisal and the tax bill and all the other evaluations that you've had? Are you deciding that as of this moment, this is the value that they agree on, and the retaining spouse is going to pay the vacating spouse X number of dollars, or is it going to be a percentage based on the lender's appraisal? Not many people like it's got to be very clear because if the lender's appraisal comes in lower than what you thought, they may not be able to access enough equity
Right.
to satisfy the agreement. A percentage is gonna, based on the lender's appraisal, is going to be a
Right.
better option, a cleaner option. So that's another thing is like people can go back and forth and around in circles to come up with a value. But if a mortgage is being done, it's the lender's appraisal that is going to determine how much equity they can tap into.
Right.
And if it comes in more, does the vacating spouse be like, hey, wait a second,
Right.
I got to get another 10 grand?
Yeah.
I mean, you got to look at it from both sides and protect everybody.
Yeah.
So,
That's a real, and that's why I like this idea of experts coming in and providing the same information to everybody at the table so that
mhm.
there is no I'm working for this side, so I'm going to elevate or de-escalate, de-elevate, whatever, raise or lower the value to make it look good for the person. Like
Right.
this is why having these neutral professionals coming in, whether you're doing collaborative law or even if it's a really adversarial situation, when the facts are the facts and you can present them that way, and as a CDLP you don't make any decisions for the couple, right? You just say here's the numbers, I'll answer your questions, and
Yeah, so I'll run scenarios and I can do it for one spouse, I can do it for both spouse, give them each because the vacating spouse might want to buy something and they need to know what they qualify for as well.
exactly.
Um, so then be like, okay, well, here's scenarios if it's a 50% equity buyout. And do they qualify? Oh, they need more income. I'm making up numbers. They need another $300 a month to qualify. Well, can we do anything with, either lower the equity payout by equalizing it with another asset or tweak the alimony and child support in a way that will, give the retaining spouse enough income. So it's that collaborative
Yeah.
back and forth figuring out because at the end of the day, both spouses want the financing to go through because the vacating spouse wants their money,
Yes. Yeah.
right?
Yeah.
So having those strategies that I can suggest and be like, okay, well, based on this scenario, you need this much more income. Based on this scenario, you qualify. And then let the attorneys negotiate it,
Right.
right?
Right.
But they've got, underwriting guidelines are, it is what it is. You have to have your DTI at a certain point. And also utilize or tweak the debt assignment.
Right.
We've done that in the past where, the retaining spouse won't qualify with a car loan that she co-signed for her son. So throw
Yeah.
that car loan into the husband's category, get it paid off with the equity buyout, put it in the appropriate sections, have the appropriate language, and everybody wins.
Yes.
So,
Yeah. And wouldn't you rather go through this and know that when you walk out of the settlement, you're covered. There's no guesswork. There's no fingers crossed this is all going to go through. That's the power of having this expertise and this knowledge before you make the final settlement.
Right.
I think it's
and
really-
and if there is any guesswork, because nothing, I mean, this is all pre-planning stuff and things like applying for an assumption. You won't know what the guidelines are going to be until you actually do it, which you can't do until after the divorce is final. But having that backup plan.
Yeah.
And like, if this doesn't work, then this will.
Right.
And this is what's going to go, and having everybody on the same page with the same expectations and understanding the process.
So critical. Stacey, we have covered a ton of stuff. We could probably go for another hour. I know, because you're
well, that was fast.
It is. It zips by this time. What do you think is the most important thing you want people to think about if they're dealing with any kind of mortgage during their divorce?
Most importantly is talk to a CDLP, and so you can make informed decisions. It's like you said, the Pollyanna's like, oh, well, we'll figure it out. That's not going to work.
Yeah.
A lot of times it's not going to work. So be prepared, make informed decisions, and talk to as many people as you need to talk to do it. Bring in the professionals, like you said.
Great insight and expertise. Stacey, thank you so much for sharing this. If people do want to talk to you about their divorce mortgage needs or concerns, what's the best way to reach you?
My website is divorcemortgagesolutions.biz. And there's a link to my calendar on there, and my phone number, all my contacts, all my socials should all be on there.
And I will make sure all of that gets in the show notes. Stacey, thank you so much for being here today. This is really important stuff people need to know. So
thank you, Marty. Oh, thank you so much for having me. It's been a pleasure.
And thank you for listening to the D-Shift podcast. And don't forget to tune in to our next episode. Thanks for listening and supporting the D-Shift podcast. If you would like to attend live trainings by our amazing guests and have a chance to ask questions and get answers from our experts, join the D-Shift crew. For more details and to sign up, head on over to www.divorcecoachforwomen and click on the podcast page.